Hi, Craig. Thanks for joining me on the podcast today.
No problem at all. Pleased to be here, Andy.
We've been working together for a long time, Craig, so nearly 3 years now, but you a busy guy. You've got a lot of stuff going on in business. We're going to get into all of that today. I think your story is very, very unique, but I think it'd be fair to say that a lot of our audience probably wouldn't have discovered you yet because you keep yourself to yourself on the most part. You're in your own lane. So can you give us just a very quick introduction, Craig? Who are you? Where are you? And what are you doing?
Sure. So I'm trying to keep this to 60 seconds. So I'm Craig. I'm the founder of CF Commercial and HausProud Living and co-founder also of Yvonne Ellen. So that's a homeware brand focused on bringing joy to people's homes. So for 16 years, I've helped get the ground floor of like new neighborhoods, the right strategy, ERVs, leasing, state sales, focusing on curating the right operators.
And it is safe to say, and I think that you're very, very modest as well. These big businesses, the commercial business, Yvonne Ellen, these are big businesses. You've got a lot of stuff going on. You're a very successful entrepreneur, and you're also investing in HMOs, which is obviously why we've been working together for the last few years. So what I'd love to do today is kind of get into the weeds of what brought you into the HMO space, how you've actually built the portfolio that you have, what that looks like now in that short space of time. And I think perhaps most interestingly, how you've managed to do it all alongside your commercial business, alongside Yvonne Ellen. And just very quickly for all of our listeners, I mean, Yvonne Ellen, you guys sell stuff on, John Lewis and things like that. So it's a big brand. So you've got a lot of stuff going on. So Craig, perhaps you could just take us back a little bit before property, or at least HMOs. Tell us a bit about your background and what sort of businesses do you run? Tell us a little bit more about the commercial business and Yvonne Ellen.
Sure. So I'd say there's three linked ventures. So CF Commercial, that is estates across London that are mixed use developments predominantly, but assets where we work on the ground floor. And the GDV on those assets is typically 250 million to 3 billion. So they are big space, place-changing developments where we've helped shape and curate the ground floors across London. So first and foremost, that's where my mindset has been. How do we make places better? And that's ingrained with me. And then Yvonne Ellen is a design-led homeware brand, and its mantra is built to bring joy to people's homes. And the quirky pieces and the lifestyle, and for every different room in the house, if you like, it's a real conversation starter. It's a much loved brand. I don't take any credit for any of the design or the actual creativity, but building a business is the bit that lands on my lap, and it gives me a lot of pleasure.
So CF Commercial, how long's that been around? And just you've done things around Wembley, I think. You've done huge schemes in Elephant Park and all sorts of stuff. So how long has that business been going on? And am I right in thinking that you built this commercial mixed use business from the ground up?
Yeah, all of these businesses have been a startup. So CF Commercial started from my front room after being at a big corporate, and that worked on basically I was knocking on doors of landlords saying we're an expert at this and this, and then they gave me an opportunity. And then fast forward that to the current day, it's these major developments like what we've been talking about. So yeah, very much a startup to the business that you see here today.
Okay, so pretty serious stuff, and you've achieved some really incredible stuff, and you've done some unbelievable deals, and Yvonne Ellen and the brand is so cool, but clearly very, very successful, Craig. Now, it begs the question, and I'm sure everybody is already thinking this at this point. Why have you decided to invest in HMOs? Now, I don't want you to answer that just yet. I want to come to that, but before we do, because I think this is what is particularly interesting about you and what I am especially proud of what you've been able to achieve. What does a typical day look like for you? Because you are a busy guy. You are very, very, very busy. So what does a typical day, a typical week in Craig's life look like? HMOs aside for a minute.
Where do I start? No. Yeah, I think from my point of view, I'm trying to keep some shape to what my sort of weeks and days look like. And it's weekly rhythm with named owners, basically. And so we're trying to track everything and KPIs and having an amazing team in each of the businesses. But most honest, I've got my EA keeps me very honest, basically, and does run my life, basically. Yeah.
I think it's fair to say that you are a process driven guy and you're very
Mm,
detail orientated.
mm.
And I have sat here in this chair and we must be on to sort of episode 330 something now. And I've
Wow.
worked with some really incredible people. And I have said very honestly over the years that the people that I have seen achieve the most and get the best results have been those individuals who've been able to focus. And I think that your ability to focus on what we've worked on together over the last few years, alongside your other priorities, which are obviously very, very significant. And we not even really touched on stuff you like to do outside of work and family, which I know is really incredibly important to you as well. And that really stands out to me. And I think what we'll find today and our listeners will learn is that the method that we have adopted and that you've learned and implemented into your HMO business is largely why you have been able to achieve so much. Not to take anything away from you at all, Craig. You're an incredibly intelligent, super switched on guy, but you've got all of these things to juggle, and your ability to do that, I think, has been so impressive. So why HMOs then? Tell us about why you decided to make this venture into HMOs with so much going on and so much success already.
Honestly, like family, moment of madness, but family security, sitting there, a bit cliche on my 40th birthday at our traditional pre-K before school drop off, and thinking and just looking like, what was if I couldn't be going out working every day? And HMOs, like, they let me, it's diversification and impact, basically. And I watched my working capital get pulled in 2008. So I have seen that, and I've decided to build assets that are basically there for my family, even if I can't work. Yeah.
So this was a very long-term plan for you, wasn't it? It wasn't like you immediately needed cash flow. You very much wanted to create some diversification, build a long-term, I suppose, future-proofed plan that meant, if anything did go sideways with either your own ability to run the businesses or the businesses themselves, you would just have these assets that were creating cash and generating recurring income. It sounds really simple when you say it like that, but I think it will be surprising to a lot of people that having achieved so much success and having businesses and running businesses of a certain scale, that HMOs are still an attractive venture. And I'm not surprised with this because I've worked with many, many people like yourselves, Craig, very successful business owners, people who've exited businesses looking to diversify their funds. It's really interesting, I think, that we all go about achieving our objectives in a slightly different way, but many of us share that same objective. And really, when we think long term, most of us, certainly the people I speak to, want to have that stability and that security, assets that generate income, whether they have to get up and do the work for it, whether their health is in good or sort of poor order, or whatever else might be going on around them. And some people build businesses to try and accelerate that process. Some people build property businesses and try and make the property business the vehicle to get there ultimately. But, you're obviously using all of your resources, your skill and experience in property, your capital, your contacts to kind of build this long-term venture. So I'm sure that this is really, really interesting for our listeners. So now that we know why you've invested in HMOs, let's talk a little bit about when you decided to come on board and work with me, because you're very intelligent, a lot of free information out there. You're very, very successful. Why did you decide to join a mentorship program? What was the decision and what was the reason behind actually coming to work with somebody like me, Craig? Because you could have probably done this on your own. You could have figured all this stuff on your own, but you decided to do it in a slightly different way.
Of course. So my mentality there was, I think, clarity and cadence, basically. So it's starting with you in the middle of, 23, you've stopped me chasing like planning heavy distractions. All I can think of, here's the cold towel coming. We've said that a few times. And committing to like license planning like HMOs and a simple rhythm. I think you've standardized, certified, stabilized, and that's meant that the results been faster and there's fewer surprises and the pipeline has been deliverable to get to this point. So I remember the first interview, the first sort of time we met, I was actually nervous whether you were going to work with me, I think you have that kind of like, sounding people out and vice versa to make sure everyone's a good fit. And I think, yeah, it felt like I was meeting a mini celebrity, basically. I was very, very sweaty palms. Yeah.
Well, I'm not sure about that, but
Mm.
I think actually on reflection of our work together over the last few years, I think that's a really, honest interpretation of it. I think what really stood out straight away was that the decision about investing in HMOs you had already made, and you were super, super focused on delivering that long-term objective, but unsure perhaps about where best to try and deliver this and exactly what method of delivery would work best, right down to the kind of the fundamentals of should we be looking at students or professionals or socials, how do these different strategies actually work in practice? And when you combine that with location, how does this all pan out in the future? And you're based in central London, not an easy place to invest in HMOs, certainly for a yield, which was a really important part of your strategy. And I think one of the other things that we spend a lot of time working on, I think you found a really great way of delivering was balance, looking for that good deal. But that good deal didn't necessarily mean the deal that recycled the most money or generated the most cash on a monthly basis. It was that deal that gave a good balance of everything, wasn't it? Not too risky, nice sort of cash flow at the back end, not too much capital left in, but happy to leave a bit in. And location was, a really important decision. And I want to come on to that and some more of those material items in a little while. But give us a snapshot then, Craig, of where you have got to in that short space of time alongside, the other big businesses that you run. What does the portfolio look like? Number of properties, rooms, and if you don't mind, what does the sort of the rental income look like?
Not at all. So the portfolio now, if I give you a snapshot of today, it's 5 houses, 35 rooms, and there's a gross income of about £250,000, and that's from our standing start together since we started a couple of years ago. So I'm super proud of being able to get to this point and to have a business model that is fully working.
And in terms of occupancy, the rooms are performing very well, and really everything's sort of gone largely to plan, hasn't it?
Mostly
in the end.
Mostly in the end, it's running at about 90% occupancy in line with the business plan. So it's still in the honeymoon period, I suppose we can call it, but it's so far so good. There's been a few issues, but that's all part of the learning curve and that you've been guiding me on.
Well, that's certainly part of property. Well, I mean, fantastic achievement, Craig. To do all of that alongside everything else, I think is really, 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 really fantastic. I mean, for a lot of people, for most people, those 5 HMOs with that sort of return, they themselves would be job replacing, territory. At that point, you could look at retiring, semi-retiring, moving out, leaving a job, going full-time in property, whatever it might be. And I think that your ability to have done that in such a short space of time is impressive, but there has been a method to that, which is what I want to get in today. So let's talk about location. You decided to invest in the Northeast and you're based in around central London. What made that the right market for you? Let's sort of rewind and kind of go back to that time when you made that decision.
Honestly, I did a big project up in the Northeast for a client. So it was a big fund that was creating a combined centre for education and wellness, and like lots of different centres that will be created, like an enormous mixed use development. And that showed me, having stayed up there a few days when we were putting their ground floor strategy together, that actually you could be at your desk, you could be surfing in the morning and then be at your desk half an hour later. And I thought, what a great lifestyle. And then with all of my sort of regeneration sort of hat on, I could see that a lot of people and the way that the lifestyle was going, that actually it made a lot of sense for a lot of people to stay there. And you could see the jobs market was thriving in lots of different industries. But the value to rent works, the transport, like we've talked about, the need for really high quality ensuite rooms. And most importantly, I found partners I trust. So with my business and family in London, dependable local delivery beats proximity in a lot of respects.
I think that's a fantastic summary. And you did a lot of work on this. It was a plan. And this is something I labour with everybody I work with, really understanding where you're going to invest and why. It can work more or less anywhere, but finding that balance to get the numbers that you want, balance time, travel, logistics, other resources that you might need. That's not so easy. And I remember doing, a very big sort of in-depth analysis of all of this with you, considering different areas. In the Northeast itself is quite a big area, really pinning that down even further. And ultimately deciding on a type of house, type of tenant. So tell us about the type of houses then, and the kind of the performance economics, Craig, that, once the location was set, that you were then targeting.
So typically they were houses that could be converted into 6-bedroom, all en suite, and a really nice big living area where there's a breakout, or you can socialize or do some work, be inspired. And so I would say the model works on for this without having to over leverage like the property on a commercial valuation at the end. So I was definitely seeing that 6 bedrooms was quite a sweet spot for me. That being said, the latest project has been 2 8-bedroom houses next to each other, so it's a slightly larger project, but that's been the model so far.
And then what was the typical purchase price that you were targeting, Craig? Was it around the sort of 250 mark?
You can halve that actually, between 100 to 150, and refurbishment pretty much the same, 100 to 150.
Fine. And typical sort of performance per room per month, what have you been targeting on that?
About £600 per room and per month, and a 40 grand, give or take, gross income before all of your operating expenses and finance.
So you set yourself a very clear framework, and you were too picky on any one detail in particular. You needed to see that overall balance, but you set to work on kind of delivering a portfolio within that framework. And I think that that's what you then continue to focus on incredibly well. And as you develop your experience and your contacts and your networks up there, I think it's fair to say that lots of other opportunities sort of tended to drift your way, and we would regularly look at them. And I think that this is one of the things that is perhaps undervalued when you work with somebody who just has that little bit more experience than you, and just knowing when to say, yeah, it's probably a good deal, but actually it doesn't really fit within the framework that we set, and it probably doesn't actually help us deliver this result. It's not to say that it wouldn't make money. It's not to say that, it wouldn't have some value, but actually, does it fit within this goal and objective? Or do we need to change the goal and the objective? When we would periodically have these conversations, wouldn't we? And we would reassess and just almost just keep fine tuning, just check our bearings and just make sure that we were still on course. And again, I think that your willingness to do that has really stood out for me. You've been happy to just almost say, you know what, let's stick with the cookie cutter stuff. Let's just rinse and repeat. Let's do the same thing again. Let's do it in the same way because it works. And of course, once you do it once, twice, 3 times, and you develop that experience, things do tend to start to get easier. You do develop a bit of a rinse and repeat. In terms of the types of refurbs then, Craig, let's just talk about the scale and the scope of refurbishments. So I think it's fair to say that these are not just, homes under the hammer type of refurbs. These are pretty, full on, refurb with compliance stuff. But tell us a little bit about the sort of projects that you have been doing.
Sure. So I will comment on the sort of projects that I've been doing for sure. But going back to what you just said, Andy, I appreciate it. And I'd say, as well as a mentor, you've been a great therapist as well at the same time.
Yeah.
Keeping the strategy on track. So, yes.
Trust me, Craig, the couch in my room has been well used over the years by my clients. But I mean, that's the reality of property, isn't it? It is hard. There are difficult decisions. But I think sometimes actually with the right know-how, it's often a bit easier than most people think to break down those challenges into smaller bite-sized amounts. And most importantly, just find a way to progress. Sometimes the outcome isn't quite as good as we expected, but we knew that there was always a risk of that going into the deal in the first place. And I think you've got to also be pragmatic in this game. It's not predictable. That is one thing about property for sure. And actually, I think that that's one of the reasons why you and I love it, because it isn't predictable, because it is a challenge, because there is a creative element to it, because you don't always quite know how it's going to pan out, and you're sort of holding your breath, but in a strange, slightly sadistic way. It can be quite an enjoyable experience to test yourself and challenge yourself and really push yourself. And I love that about this business. So tell us about the type of refurbs. I mean, there have certainly been challenges with some of the refurbishments as well. I remember one in particular that we laboured on for a while. But give us an idea, give us a flavour for the types of projects that you've been doing.
Yeah, so look, it goes back to the big generation schemes. Like, what do they teach about good housing and community? And curation and standards create the outcomes. So I think the best schemes get the operator mix and the handover right, and somewhere you want to live that reflects your personality, almost like where you would meet someone in a coffee shop and be happy to invite your friends to go and meet you for a coffee, go and meet you there. And I think the same applies to HMOs. So always looking at it on starting again, so back to brick refurbishment and having everything built so that you would want to you'd apply the same philosophy. Quiet doors, couple of cupboards per tenant, so that the kitchens stay calm, the breakout areas we've mentioned, and management that responds fast, so that we're like, when the basics are right, and you put in high quality all en suite, so you've got your own self-contained space to live in. If you don't actually want to mix with anyone else, you could live in your room and quite comfortably. I think that's where you do create, the basics are right, you create community.
Yeah, I think all of these features, they're ingredients, aren't they, to create an environment that, from our perspective as landlords, as investors, nurture tenants, attract tenants that, tenants want to stay there. They don't feel like they need to stay there. They choose to live there, so they're willing to pay a bit more. And also they want to continue staying there. And I think that the value of that is so still underappreciated. Tenants who stay for longer are so incredibly valuable. Churn is a very, very expensive part of the process. And churn happens because the actual practicalities or the living environment aren't quite meeting a tenant's needs, or often the management isn't quite good enough. Tenants feel that they are undervalued, underappreciated. They're not quite getting what they want. They get frustrated and they move on to something new. Customers, tenants, that they are, fickle, like many of us are with many services in life now, and that's reality. And I think you've really focused on building a service, much like you have with your other businesses, where you've got a client and a customer, and they need to be happy with the service, and more importantly, impressed with the service and want to continue using it. And I know that a lot of the time and focus and effort has gone into that. And actually, just looking at the schemes now, we've labored a lot. We over details of the schemes and maybe investing a bit more in certain spec items, just to make sure that you have put yourself into that top percentile of accommodation, because we both believe that if there were to be an issue, if the market wobbled or anything happened, then actually having the best accommodation, even if you had to price adjust, would be, a better position to be in. Being in the middle of the market or the lower of the market and then having to adjust price gets quite difficult. So watching you prioritize all of that stuff and create really incredible homes that look great, that provide great living for tenants, I think has been very impressive to see. And obviously that is reflected in your occupancy now. The performance in the portfolio is running very, very well. Let's talk about then some of the logistics of this, because I'm sure a lot of our listeners right now are thinking, well, you're in these businesses, you're very busy, you're based in London, and you've managed to do this in the Northeast. Surely, you are not up and down on the train every week or every few days to manage these refurbishments and make it happen. And obviously that's not the case. So let's talk about how you have been able to deliver this, Craig, because I think this in part is quite unique as well. Let's talk first of all about actually finding deals. How have you found deals that are several hundred miles away from where you are, with a limited amount of time to invest in that process yourself?
So it's been through partners and people who are there on the ground day in, day out, and having people that you work with once and you build some trust with is always the key. It's long-term relationships, so that that when someone picks up the phone to you, you are getting the real scenario, this is what it is. And I think that's enabled me to go on and to start scaling like I have done. So yes, you're absolutely right. I haven't been going to King's Cross up to the Northeast every week in, week out. But you know what? I do like the train journey from time to time, because it's a bit of space to think and do some work and a bit of peace and quiet. So yeah.
It sounds like these relationships, Craig, which have obviously been critical, you almost look at them like a real business partnership, even though technically speaking, they aren't necessarily that. They're party providers and services that you work with or employ the services of. But it does sound like that was the way that you approached it, and you didn't rush to make any decisions with the potentially wrong parties. Would that be right to say?
Yeah, 100%. Because at the end of the day, you just can't do everything, and there's no point getting it wrong. So, yes, err on the side of caution, but when you do something, just make sure that you've mitigated as many of the risks as possible. And I think having you there and just sort of going with my intuition and everything I've lived and breathed in my career, it feels like it was just a natural step for me to be able to deliver on these types of projects. And having a weekly operating rhythm, like with named owners on who's doing what, is really like makes us track occupancy, voids, snag status, cash every week. And my EA, honestly, she's like a rash when there's at the moment a room's empty. So she's on our, keeping our local partners honest, the letting and the managing agents. So yeah, I think it's been pretty manageable so far.
You mentioned earlier on KPIs, and this is something that you've put to really good use in your business. Obviously, the sort of partners that you use, sourcing partners, delivery partners, people to do the refurbishments, you've obviously paid for those services, but that has meant that you haven't had to be there and involved on a day-to-day, week-to-week basis, which practically would have obviously been impossible. And that was a very strategic decision that you made. And you've obviously picked very carefully and been very diligent with who you've chosen to work with. But those KPIs and, those different targets that you have set, you have positioned yourself within your property business to manage these people. That has become your role, hasn't it? Managing the people, sourcing the right deals, making sure that actually what you ultimately buy is quite right. If there's more negotiation that needs to be done, and same with your refurbishment partners, your job is to manage them. It's not just to expect that they deliver everything 100% of the time or in exactly the way that they tell you that they will. Would that be fair to say, Craig? It's not a completely passive exercise, is it?
No, 100% not. What's the saying? You can only manage what you measure or measure. Anyway, I've butchered that a little bit. But the point is you can't give everyone just free rein to go and mark their own homework, because you know what will happen. So I have tried to put in as many safeguards as possible. And I think one of the best things that we did early on, best bits of advice that you gave that gave me the comfort, was with regards to getting a minor works JCT contract signed off with our contractors, and additionally having a monitoring surveyor, so someone who was local on the ground, going there week in, week out, signing off the work, inspecting what had been done, that was on sort of my team, if you like. So it's just, that's one of a number of things that have enabled me to be in this position where I get comfortable with large sums of money being spent when you're not sort of physically on the doorstep.
Yeah, I think that's a really great point to highlight. And by the way, that phrase, you can't manage what you don't measure, is right. And I live and die by that as well. My non-exec, JP, drilled that into me at a very early stage, which is probably why you and I have worked so well together as well, because we both have that same attitude towards managing, measuring important detail. And I think it is a really important piece to highlight, because I think that there could be an assumption here that employing these third-party services is a way to absolve yourself of being involved in the growth of a portfolio, and it can all just kind of work largely without you. And actually, that's not the case. We identified very early on that for you to make this work in this location, there were some inherent risks, one of which was that you were not going to be there and on the ground yourself as regularly as you might otherwise be if it was local or you had more time. And so I think one of the focuses of our work together over the last few years has been to continually review risks, I think, hasn't it? And you just talked about an example there. I mean, let's get into that, because I think that this is, again, such an important part of the whole process, and one of the things that I think that is often overlooked, especially by investors that perhaps relatively new to the process of investing in real estate. I mean, bringing in a monitoring surveyor is such a simple and straightforward task, but I would imagine that less than 1% of our many thousands of listeners do that. And I do it on every single project, as do you. That is your eyes and ears on the ground. That is somebody measuring the works and making sure that you don't end up in a position on the project where actually you've overpaid for works that hasn't been done, and then the builder walks off, or the builder goes bust, or you have that sort of issue, or you have an argument or a disagreement, and the builder told you that X, Y, and Z has been found and happened, and actually the contract says this, we've paid for this, it's very black and white. There's been lots of other stuff that we've done, haven't they, Craig, that in terms of risk reduction and risk mitigation. Are there any other sort of standout features, that, in terms of risk management, that when you look at your portfolio, you feel like have been managed very well from your perspective to kind of help contain all of the things that could go wrong? And I suppose we're talking about stuff like how you manage the occupancy period, or making sure that your property managers are actually performing in the right way. What are the sort of tactics have you employed to actually help make sure that the portfolio and the performance has been delivered within that framework that you set out?
Yeah, so the weekly rhythm that we started to talk about a bit is so important, and having that visible and shared with your local partners, but shared with your the home team, if you like. And when a room is empty, it's about just really being front and center and managing. And you've shown me some tips and tricks as well to like relate to the leasing or the lettings and the managing agents about refreshing adverts and just being really proactive with basically understanding that your profit every day that these rooms are being vacant is being eroded away, and it's worth reducing if you need to, as opposed to just digging your heels in and trying to get the highest rents. So yes, look, the local partners take the first line issues, I'd say, and management day to day, and I take on the exceptions. And I think getting that process holistically into place has been the key here.
And ultimately why your performance has been as good as it has been. Craig, let's talk about your plans for the future, because you've got very big plans with all of this stuff. It feels like we've just been warming up. What do you want to do with the portfolio now? Where do you want to take it now that you've got this foundation, you've got proof of concept, you've got your local partners and the strategy? What do you want to do next? Where does this go?
I think it's the cold flannel again before I answer this. But it's more of the same. And the size up as well. So I think more of the same in terms of the smaller licensed HMOs, 6 beds, but then looking at town centres and old, underused, utilised like buildings, and thinking actually this would be a fantastic conversion into a larger HMO. So I have got an eye on that. I think I'm not running before I can walk now, and certainly something in the next couple of years that I'll be looking to do. So I think going from 35 rooms to 100 rooms, so like 1 a quarter for the next couple of years, and then one slightly larger one will get me there or thereabouts. And then I think it will be taking stock of where we are at that stage. So
very exciting plans, and I've got no doubt whatsoever that you'll continue to do really great things in this space. One thing I want to ask you, Craig, is about finance and access to finance. I think this is probably a good point in today's episode to perhaps dispel the myth that because you are a successful business owner, you just had an infinite amount of capital to plow into this business. But actually, the truth is, you have been, like most people who enter this space, very, very resourceful in terms of where you got your capital from. Can we talk about that? And obviously, as we look ahead, this is something you and I have talked about a lot more, that requirement for more capital becomes increasingly important. Can you tell us about that role within your business and finance and access to private finance, and kind of how that kind of fits amongst this whole plan?
I think confidence comes from track record, like delivery and transparency. And I think you're absolutely right. We've had throughout the project from start, for each one, been raising private finance basically and growing other trading businesses. That means that a lot of your capital and cash flow goes into growing those businesses. So you're right, you haven't got a magic tree sitting somewhere where you can just go and buy and refurbish HMOs at hundreds of thousands of pounds a time. So I think from my point of view, I've gone to people who I've known over the last 16 years in the property industry, and I've said, hey, this is what I'm doing, this is how I'm doing it, would you be interested in earning some extra money on your cash that is sitting there? And that doesn't mean that they have a stake in the properties. It's an investor rolled up loan, so they have provided me the cash, and then the interest rolls up, and then I pay them back once we go on to a refinance, so once it's been refurbished and once the value has been round, and then I pay them back their cash with interest. And what I'll say is my biggest tick in the box with this so far is that I've had the same two investors invest in every single property. So I'd like to think, yeah, that's a big sort of tick in the CV in a private investor box, if you like. Yeah.
Well, it's obviously been such an important part of your ability to grow as quickly and as far as you have in that short space of time, but obviously an increasingly critical element of what you need moving forwards. And I think one thing I picked up that I think is so important to highlight is that some of these contacts that you're able to tap into go back 15, 16 years. And I think that is such an important thing that we should all be doing now. I think, one way that I like to describe it is make all of the work that you're doing now work a bit harder. Share your work, invite people in, build your network and your contact base. Because even if you don't need them now, even if you don't need their capital or, you need nothing from them right now, at some point in the future, you may well do. And if you've got a good relationship and you've been able to demonstrate a good track record and there is trust, it makes the process of raising capital so much easier. It removes that friction. It's much harder to do from a cold start if you have no contacts and if you've got no experience. Going out to raise capital is much harder. Not impossible by any means, but it is much harder. And I think, again, fair to say, Craig, that you followed my blueprint. Like, here's how to put a deck together. Here's how to package your deal up. Here's how to demonstrate what you're doing, who you are. We wrapped all of your business up in a fantastic looking brand. It all demonstrated, and I think to neatly packaged up your objectives, your goals, your mission, your value, as well as the bit that is also important to investors, which is the return and the risk and the security and the exit and things like that. And of course, you went away, picked up loads of finance, and actually then the problem became, well, how do we spend this money? We need to potentially do more deals, but we also need to balance that with not tripping ourselves up. Craig, it's been an absolute pleasure to work with you over the last few years and a real pleasure having you on the show today to talk about your story and your journey. I think it's a really unique and really inspiring story. I know behind the scenes how important your family is to you, and really that's the big driver to all of this for you. But I think watching somebody with as many priorities and commitments as you do this and achieve such great stuff, I think it should be such a great learning for anybody today. I think, anybody who is wondering whether or not it can be done, whether they're too busy, I think this is just a very gentle reminder that they are all just excuses. If you're prepared to put the work in and if you're intelligent about it, you can do really, really incredible things. And I know right now, as we record this, and we talked a lot about this actually in our session earlier this week, the market's not in a particularly great place from a confidence point of view, is it, Craig? There's a lot of people unsure about whether now's the right time, should they wait, sitting on their hands, people potentially getting out, people saying property is done. And actually, I think long-term, the sorts of accommodation that investors like you and I and our listeners and our community are creating are going to have such an important role to play. We're not building any more houses. We know that we have a growing problem. Quality and value and service is increasingly important. And one thing that I don't think AI can replace is putting together a product like this. There's bits of AI that can help us along the way, but actually delivering a product like this is going to be one of those rare, I think, business strategies that kind of, well into the future just, remains, irreplaceable. So, Craig, thank you for coming on the show today. I'm so pleased for you and, so proud of all the stuff that you've achieved, which is truly incredible. Before we wrap up today, is there any sort of parting words of advice that you would give to anybody, maybe just a few years behind you, setting off with similar objectives and, a similar sort of target in terms of what they want to get for maybe investing in some property? What words of wisdom, what advice would you share with them today?
Words of wisdom. I would suggest that you pick one model and one metric and you build this weekly rhythm and protect your thinking time and you leverage your time with a great EA and say no with like Cole Taylor's done with the clever off-strategy deals. And if it doesn't pair every decision that you make with a human outcome. So if it doesn't make your residents happier or your houses run smoother, it probably does not matter in a lot of respects once you're up and running.
Some great advice. And I think, again, another sort of version of the word focus, which we've talked about so much on the show over the years. Craig, it has been a huge pleasure. For anyone listening today that wants to follow you on your journey, maybe reach out, maybe wants to work with you, give you some money, send you some deals, where should they head to?
You can go to HausProud Living, our website, or on Instagram. It's spelt the German way, House, Haus, Living. So, yeah, you can find me there.
Craig, thanks for coming on the show. It's been an absolute pleasure. Well done on everything you've achieved, mate. And I'm looking forward to seeing a whole lot more from you in the future.
Many thanks, Andy. Really much appreciate all your help. Thank you.